10th of November, 2023. Taking stock. Welcome along. By all means, if you do like the content of this live video, then hit that like button. Apparently, that's the way the algorithms work. And comment. In fact, we have a comment already. Harish says, apologies if you already discussed this week, but nice to know your thoughts on Argentex shenanigans. We'll look at that and other things. But what I'm talking about today is the main subject, as it were, is this company is outstanding. Do you know of any other companies? And I'm going to highlight the company now. But if you think you know of any other companies that are outstanding, let me know. I'm going to reveal a company that's outstanding. Is it an investment now? Not so sure. Not so sure. And I'll go through why. But it's still cracking. It's, an amazing company. Let's quickly look at the indices. And by all means, hit that subscribe button on YouTube there if you haven't. Like I said, download the Vox Markets app. It's what's going on here? It's free to use. It's priceless. Rises. They've got 3 rises. Is that it? The FTSE 100 down 1.37%. Of course, there's a bit of volatility in the US markets later on as Powell. Did you see Powell? Jerome Powell. He was on stage talking, and a couple of protesters walked on. He was very polite, and they went off stream. He said, "Sorry, okay, thank you very much, And then he did say, "Just shut the effing door." So he did sway. Whoa, it's a side of Powell not seen before. So rises there, BAE Systems, Shell, BP, 2 oilers, and defense. Fallers, Diageo. Now this is like a fund manager's dream of big caps. I've always mentioned, everyone sort of mentions Diageo brands, very strong. They've got very strong brands like Johnny Walker, all that around the world. This is very telling today. Very telling. Are people now, shooing or poo-pooing brands and going for like more valuable own labels? I think that for a long time. I said this for a while back, years ago, and I think it was measured by the Mrs. Bouquet residents. Do you remember Hyacinth Bouquet? And I can't remember this. What was the show? But back then, in a day, in the 80s, 90s, 2000s even, maybe, people were proud of brands. So they wanted to show off. And I think that is almost seeking approval from other people for your happiness. If you're going to seek approval from other people, you're never going to be happy, And I'm thinking now, people don't mind now. It's almost just stupid not to buy sort of own label stuff, rather than brands, because you can get some very good quality own label, like, as Aldi, Lidl have championed that, and people now are trading down. And maybe that's a hit. And I think, Unilever the same, maybe. Big companies like that, who have these big brands, I think that protects them. I don't think that's the way the market, the people are going. The consumer want good value, good quality. Do they care about the brand? If they do, I think it's just trying to show off. Anyway, Ocado. John's not here. Hopefully here next week. He'll be glad that's down 7.5%. The AIM share's broken a run. This is very telling. The AIM share up 9 days in a row. I did say this on my Twitter. 9 days in a row. It hasn't done this since the top and the end of the bull market in 2021. It did 11 days in a row back then of September 2021, and it hit the highest level it's ever seen. Now, I think these two extremes are quite telling. Yeah, well, today we're having a bit of a rollover, but I think the final rally, the froth of the bull market, and now the bounce off the bottom, 2 very aggressive, areas of the market where you've seen strong moves. If this is the bottom of the market, who knows? I mean, let's look at the AIM share. There it is, look, and that was the last sort of 11 days in a row up here. That took it to the high of 2021, and now let's go back to where we are now. 9 days in a row, pretty much rolling over a little bit with the rest of the indices. But anyway, there we are. Okay, let's any comments apart from the Harris there. Yeah. John's favorite stock is all over the place again. Ocado, yeah, exactly. Mrs. Bucket, that's it, yes. Hyacinth Bucket in name, wasn't it? The Bouquet residence. Yeah, let's look at Ocado. Well, let's look at the chart on Ocado a second. Ocado. Ocado. What do they do? I think M&S, wasn't M&S like did really well this week? The only problem issue was the Ocado side, wasn't it? I think. I don't know if I'm reading that right. But that there is like that. I just kept the 200-day moving average on, so you can see all the way down, didn't pierce it. close above it there one day, that's not good. You want another break of that high, and then down again, you want another break of that high. Still, lower highs there, and then a break up here, but it's back below that now again. Lower high, back below that. So it's not looking good there. Okay, so this is the company I'm talking about, right? And it's called, you probably saw the results of the day, some of you may have guessed. But I say this company is outstanding. Please name your own outstanding company, and we'll look at it. But the company is, and I'll share this with you. The company is Warpaint London. I can't even say it. W7L trading update. Strong performance continues. It's always good to read that. If you're an owner of the stock, strong performance continues. Hasn't just started, it's continuing. The company announced 20th December its results for 6 months ended the 30th of June. They announced that, and the group has traded strongly since. And they say there significant growth in all geographic areas. In fact, quite the opposite of what Diageo is saying. Traded strongly post-period, and they're saying their group sales expected to be at least £85 million. They're 64.1 last year, with a pre-Christmas sales period for the group still ongoing. Gross product margin remains robust. That's always good. They're not, having, getting these sales in sacrifice of their margins. And the profit before tax for the year ended now expected to be 16 million, up from 7.7. That's good growth. And they're still expanding in a number of new territories, in Netherlands, in Philippines, and also expanding existing on their footfall there with that. In the US, CVS stores, 372 CVS stores in the US, 102 Boot stores in the UK. So it's looking very good indeed. Let's look at the chart. And you can see this. And I do say, this is real-time data. Look at this. I mean, the time to buy the stock, literally, you can see the 200-day moving average there. The time to buy the stock was £1.39. £1.39. £1.39. Because why? It broke 200-day moving average, right? Then a previous high closed above previous highs here. All these previous highs at 139, 140. Let's say 140. Let's call it 140 amongst friends. Up it went. And then from 140, where is it now? 335, gapped up today on today's news, and it's going very well. So what I've done is I put them through my spreadsheet. This is a spreadsheet I've created. Take me a good year or so to do this. It's so many formulas in it, but it looks at essentially, it emphasizes growth because I'm looking for small cap, micro cap, nano cap companies with growth, but it also looks at value, health, efficiency, momentum, and forecasts. All right. This is it. So I punch in the figures here, all the figures in there. From this side is basically full year results. This is interim results, and then it comes out. Put the EBITDA in, put the price information in, stock information, and I come out with company information. I put the forecast in as well. It comes out with this spreadsheet. Okay, and obviously you've got green on the screen is very good, and red or orange. Questionable. Red, well, a little bit worrying, but orange, okay-ish, but keep an eye on it. So 335, in fact, because these are the most current set of results, okay? 335, market cap 258, enterprise value 256, that's below market cap, that's good, that means they have more cash than debt. Average daily volume, decent volume there, 620 grand a day, pretty much. So even if you do a tenth of that, 62 grand. So it's quite liquid for most, small cap investors. Revenue here, debt, that's only red there. They've got 5.3 debt, but the operating cash flows there, dividend yield, all that. So look at growth. Look at this growth. They get top marks on their growth. Every year, revenue growth, operating growth, net profit growth, operating cash flow, free cash flow growth, all growing nicely. Very nicely indeed. Let's look at value then, because sometimes it's very hard to get a growth and value stock, but that's what you've got to aim for. Because if it's overvalued, that can be a risk, So let's scroll down. We've got a bit of red here. Price of sales 3.5. Price of earnings 27. Price to book 6. EBITDA 18. Not too bad. That's not bad. It's still a youngish company, so that's okay. Price of free cash flow 80 times. So it's maybe a little bit. The thing is, with a good company, sometimes you have to pay up. I mean, like I said, if you're looking at average PEs and all that, this isn't an average company. When you have a company that's not average, you expect to pay a bit more for it because it's good quality. It's outstanding in its field. Health-wise, it's all good. Cash, they've got net cash of 1.7 there. Gross gearing 12. Current ratio 3.5. No worries there. Efficiency, gross margins 39, 70, not really good. Return on capital, all very good. Momentum, excellent. Above 50-day moving average, above 200-day moving average. Is it 50 above 200-day? Yes, it is. All that good. Now, the forecasts, I put these in, and upside potential, not huge now from here, unless they grow. I've only guided 20% growth in the last 2 years, next 2 years, and they've gone for, they have done 28, 33%, so I've gone for 20, and used the same sort of margins and improved them a little bit. So all I would worry about here, but having said that, it's a great company, and companies that grow very quickly and do very well can stay overvalued for a long, long time. So it's a minor concern, but all in all, I think, Warpaint London is a fantastic company doing very well. A British company that's expanding around the world. Very impressive. I like a lot. Would I buy it here? No, like I said, the best time to buy here, it'd be a cheap company down here, or cheapish. Now it's 3 times that value pretty much. But nevertheless, it's a great business. I want to emphasize, when you're in, I'm not talking about trading in little rubbish stocks that may rally on a bit of news, 100%, 50% on all strike. I'm talking about companies that are good operational businesses, outstanding. When you're investing, I think this sometimes, if you're going to become an investor in a company or in a business, think, what kind of business would you like to own? One that's on its backside, looking for funding somewhere, and maybe just a jump in the stock price, or something actually doing very well. They're doing good business. They're growing. They're expanding. Be proud to be a business owner of a company like that. And so, when I sort of invest, I do look for great businesses or potentially businesses that are going to be great. So I think I'm not in there. I don't own stock in it, by the way. But I think it's a cracking business and it's doing very well. And well done, shareholders, if you've got in there at decent levels, because that's cracking. You can see there, even if you put the 50-day moving average on, the golden cross was down here, at 158, pretty much. So it's looking good, looking very, very good. Your suggestions, please, of companies that can compete with that. Is there any company out there at the moment that can compete with that? Let me know. But that is good. People still do care about brands. I look at M&S and LVMH. I know, yes, but they still have to offer value. And if it's fine, if the brand is in, people do still care about that. But I think the shift is generally people go for quality and value. And then I think brand has become almost, some people still do. I don't really give a toss about brands. I don't want big brands. I don't want a brand. I don't care as long as it does the job and is a good value. In the case of brand loyalty, I think brand loyalty to a certain, for the majority of people, I think is waning. I think the importance of brand loyalty, as long as the brand stands for quality and good value, yes. If it's overpriced and you can get stuff elsewhere, same quality, I think they'll suffer. That's a sweeping statement, very controversial, but there we are. I think alcohol is separate to that. Maybe, it isn't. Diageo, let's have a look at Diageo. Okay, let's look at Diageo there. It actually tripped out on my, I have got on a list of recovery stocks, hopefully. But like I said, these can take a long time to recover. A long time. It took 6 months now because they're saying, let's go to Diageo's results there. What's a nice it's a nice down 13%, okay? And they're saying trading update. Diageo issues trading update. Who writes that? We know it's you. Your name's there. We don't need to say Diageo. It's written in the third person. Just do trading update. That there is a waste of those letters. Trading update's fine. Just say that. So they say issues trading update, weaker performance outlook in Latin America and Caribbean, and updated medium-term guidance ahead of 23 capital markets event. And they say that it's LAC, which is Latin America and Caribbean. 11% of Diageo's net sales value is now expected to decline organic net sales by more than 20% year on year in the first half of 2024. So they say, I mean, they're great. They've got some great brands, you know. And I do believe, you know, people will, I think, for alcohol, go for Johnny Walker and that stuff rather than Aldi, Johnny Smoker, or how did they get away with that? Aldi and Lidl, they just rip off brands, don't they? And just change the name a little bit, you know, like Babsolute rather than Absolute Vodka. But yeah. So they say they're trying to deliver organic net sales growth between 5 and 7% over the medium term, but they see 2024 not as good as 2023, essentially. So yeah, but you know, like I said, who's to say? They're looking into the future. They don't know what the future's going to be, and I can't see the cost of living crisis easing up for 6 months. You know, so to me, never jump in on a falling knife, and that is a bit of a falling knife. You know, because they're going to have to update. And like I said, look at that. That was a downtrend for a while. You can see here, you know, a series of lower highs, and literally they got steeper, and then all of a sudden, boom, off, it dropped through the floor. So if people buy on the support level, don't just wait for an uptrend. That, you know, so you're gonna have to wait. If you look back now, I mean, it's plenty. You know, you can. I just think it'll take a long time to recover here, but it could be an opportunity. Like many other big companies that fall out of bed. It could be an opportunity down the line. But for me, like now, it's a put on your watch list. In fact, what I'll do is just as a series of you know, just a series of uptrend, add alert there, price crossing 50-day moving average. In fact, I think I did that today. Oh, this there, yeah, it crossed down nasty. So I'll just wait now, sit back and wait and see if it starts to rally a little bit. But yes, okay, a sec. Bought those in March 2022 below 120. Sadly, no longer own these. Why, Rob? Rob! You've been robbed, Rob. Warpaint is a good brand. It is, but they're also doing this. But isn't Warpaint, is it expensive or not? Is it good value? That's what I'm saying. Yeah, but you know, all I'm saying is if the brand stands for quality and value, yes. Or you could, I mean, add a couple more quid on maybe for the brand. But I think largely we're heading away from that. I think. Do you know what? An aging population we are. Not Asian, aging. And that means as you get older, you don't care about brands too much. My son does. He won't wear anything that's not like Nike these days or something like that, or whatever. But he's 13, you know, and my other son 10. But as you get older, you don't care. You're lucky if you go out of your slippers in the morning. Okay. But so Rob, I did talk about yesterday. I don't know if you saw this, but I was saying that you know, the way to sort of play winners, and you see a lot of people saying top slice. I wouldn't do that. Why? Because like I said, you know, if you do research and you buy like 10 stocks, or whatever, and they have massive upside potential, maybe 1, 2 of them will really outperform. Hopefully, if you've done a good research, and they can transform your portfolio, just 1 or 2, you know. And if you just top slice those, you would never get the full potential. But if you actually limit the downside, you know, put a stop loss saying, you know, if you're in profit, make it then a sort of risk-free investment, it can keep going up, and you can move that stop loss up as long as you allow for volatility, you know, and that's the way to play. That's the way to, there's too much emphasis in trading, trying to get a quick profit. That's a cracking business. And it seems to me, you know, the stronger businesses tend to get stronger and better. And, you know, like I say, just carry on holding a good business, you know. It's a good business. Okay. I think you know what stock I would recommend, Justin. Golden Cross formed on that chart too, and above 200 moving hours convincingly. Technicals showing ahead of news. Yes, but Sean, I keep saying this to you. You're in one stock. You've largely invested in loss-making stocks. They're very high risk. You know, very high risk. So be careful with that. You know, it's a different kind of model than the thing. So be careful. So I'm saying. Taylor Swift has brand loyalty. She does, doesn't she? But you know, when it comes down to things like that, you look at the earning power. I've thought about this as a human, right? Think to yourself, where are you? Are you 1 in 1,000? You know, with the qualities you have, the talent you have, whatever you do, are you 1 in 100? Are you 1 in 10? And then you get those people up there like that, Taylor Swift. They're what, 1 in a billion? Are they? Pretty much where they get, you know, that kind of hit, you know, Beyonce and all that. Michael Jackson, maybe Michael Jackson, but that was, you know, 1 in 10 billion. There's only one of those on the planet. But those kind of earners, they're worth it. But I mean, anyway, Cadbury's is such a lame brand. Yeah, okay, that's a good that's a good topic, Informer. Name some lame brands that you don't think should be regarded so highly. Yeah, Craig said, why did you? Yeah, Rob, actually, why did you sell Warpaint? Let me know. Because like I said, you picked a good winner there. There's nothing worse than that. I've done that several times. Picking a stock winner and then getting out before it starts winning. That's really annoying. It is. So why did you sell that, Rob? I'd be quite interested. Okay, let's just go to the front page of Vox here. See what's moving, what's shaking. In fact, so Neo, that's very interesting. I think I'm going to be doing an interview with those guys soon. Neo Energy Metals, they're in the uranium space, and they listed recently, or reverse listing. And I know a lot of people like uranium. People are coming around to uranium now, aren't they? They raised 4.9 million and subscription so they got about 5 million in cash here. But they own, 70% interest in the Hankreys uranium project in the Northern Cape of the Republic of South Africa. And literally, like I said, what stage are they at here? Let's look at raise funds. I look at this. So this is a uranium project estimated mineral resource of 4.7 million pounds uranium has been subject to extensive historical exploration activities. I know countries with this, like I said, since the Ukraine crisis, and there's been worry about energy supply and security. Uranium now is starting to realize it's quite a clean energy, and if done well, it is safe, and so you're getting a lot more interest, I think, going into the uranium field, not field, but in that sector. So it's a very interesting company here. This is, if you're into that sort of sector, put it on your watch list. In fact, I will actually there. In nanocaps, there we are. I've added to my watch list. That means now, see, via the Vox Markets app, what I do is basically, get notified when they release an RNS. It comes to me. I don't have to go chasing, looking down for RNSs. It comes to me. It's free of charge. Did I mention that? The Vox Market, I don't know if I did. I don't know if I've ever mentioned that, but it's free of charge and it costs you nothing. Diageo is most followed by that, jumping on the falling knife, or just doing what I'm doing, just looking for upside there, or putting on a watch list, basically. Destiny, Vietnam Holding, CTL. What's going on with Helium One? They seem to have operational difficulties. That should be the title here. Down percent. They've had this the last couple of times, haven't they? On the Tide 3 well. The company's Epiric Predator 2022 drilling rig has encountered an issue with the hydraulic system. I don't know what's going on with this. They seem to be having a lot of technical problems. It's affecting the performance of the iron roughneck mechanism. That's a hell of a term, isn't it? Yeah, it's affecting the iron roughneck mechanism, right? Yeah. Both the hydraulic system and the iron roughneck are critical to the operations of the rig, and as a result, the company has had to temporarily shut down operations whilst the full extent. It's a well-followed company, but it's underperformed, underdelivered massively. I mean, look at the chart there. Oh, it's crossed out. No, it hasn't crossed out. I was yesterday with it. Look at this. HE1. There's a lot of people investing on hope here, hoping of a big hit. And the hydrogen, as you know, somebody saying hope is not an investment thesis. In fact, it's hard to think that when you're investing in something and you have money in a stock, you ultimately, as soon as you put money in a company, you're biased. Okay, it's subjective. So sometimes you think, am I investing in hope here, or this is a proper business I'm investing in? Warpaint, second most read, and it should be. It's a cracking business, very good business, top quality. Argentex. So we had the CEO stepping down. I say step down. I think he was elbowed out. The CFO gone, and they come up with a trading statement. I think this is the reason why largely maybe those two people will let go. So having said that, it's dropped off a cliff recently, 3.54%. So they're saying they're very short statement. The board of Argent expects to report revenue and operating profit for the year to the 31st December at approximately the same levels for the 12 months ended the 31st of December 2020, which are below current forecasts, which is, it's annoying. In fact, he said there, Jim, I don't know why they haven't made the J bold on that, Jim. Obviously, it's very disappointing that the numbers this year are likely to show little, if any, improvement on the last year, and current market conditions remain challenging. However, Argentex continues to be stable, profitable, and cash-generative business. We're in the process of concluding a review of our strategy, which will communicate with investors in the new year, and remain confident that there is significant market opportunity for us to exploit. So you've got to think now, okay, what is the valuation? They're saying little, if any, improvement on last year. So that was 50 million turnover, around about 15 million of EBITDA. Okay. So what's the market cap right now? And they are at 70 million. So what's that? 5 times is EBITDA, is it? In the maths, four and a bit. 415 to 60, pretty much. Yeah. Just shy of 5 times EBITDA. That's assuming now there's uncertainty within this stock now, because they're assuming they're going to hit the same as they did last year. So what's happened? Because, like I said, they've come down from a lot of growth. In my mind, where there's uncertainty, you may be able to take advantage if it sells off really big. But again, when there's enough risks in investing, I do like the business. I think it's very, I did hold this company, but when they came out with their last set of figures, I put it through my spreadsheet. I wasn't that convinced, and then I sold. And turns out I sold at the right time, because I did sort of get in down here, and I think I sold around, I don't know where I sold, around about here somewhere. But it was sort of rolling over, and then look at that, nasty. But the thing is, it's annoying. But like I say, they're cash generative, and they're on that level of last year. But if they're looking to the future is like it's like the weather forecast. How accurate can you predict the weather? How far out can you predict the weather? And even now with the modeling we have, beyond 7 days gets less predictable. Of course, with businesses is more than that, because you've got contracts going on. But what I'm saying is, okay, you can maybe be accurate within 6 to 12 months. The further, as long as the further you go out, the less accurate those forecasts become. So it's like I said, there's some uncertainty in here, and I think even the brokers pull their forecasts going forward until they see figures coming through. But yeah, it's a hell of a fall off there, hell of a thing. But now they're saying they're not going to grow. You invest in small cap companies, to get that growth, and they're not going to grow. So they're not good value, but you need growth, essentially. So that's what I think. I mean, it's not it's not I mean, there's the cash generative. It's not that they're losing money, have to go to the market to raise money. That's not the case. I mean, in fact, talking about that, one of the fallers today is that kind of case there. It's like Ethan, I mean, a basket case. I didn't understand the rally in that anyway. It was a near-death experience. Bowleven, for example, 23% down, and they are saying they're having problems or issues, fully results, but it's then they need to raise money. And there's this problem about they haven't signed on this deal or whatever, but the loss for the year is 2 million. Their close of cash, less than 1 million. And they do say they're cash burn, they're trying to preserve it, but they're going to need to raise money. Eli says, while we clearly find ourselves in a challenging financial position, Bowleven remains on the verge of a significant turning point with a new IDI operational offering. There we are. So hopefully something will come with that. But if you're loss making, you don't have any cash. That's it. That's the blood in the system of the body. It's like draining out the blood. You can't operate without blood. I don't think so, anyway. I'm not sure about technology on that side. Let's have a look. I really like Warpaint as a business. Was doing well in a hard market, increasing sales profit, but got scared out of it because the share price was up and down for months. Yeah, that can happen. Yeah, that's why you need to buy in the breakout. Yeah, do your fundamental research. I keep banging on that. Phil says, I'm reading an IC article from 2000 in the last 3 years. Diageo is still around, still growing. I think generalizing that not everyone likes brands may be misproven. Yeah, you may be right. You may be right. Listen, I have very little doubt. When you have the size and scale of some of Diageo, you make it work, especially you've got very good brands. And in fact, Diageo, going forward 2 years will probably be an opportunity where it is now. But don't expect it to, sit idle around here, because you've got uncertainty now, and you've got the worry about, are people going to continue to tighten their belts next 6 to 12 months? Are they likely to get better? Are they going to sell more, basically? Are they going to improve in the next 6 to 12 months? Because It's hard market out there. People are buying expensive brands when they can buy, alternatives. So just looking like that, looking ahead, I think we'll see further weakness in that share price. I'm forecasting there. As I said, there's no fact behind that, but that's just opinion and fact. That's my opinion. So I wouldn't jump in now. So Rob, it seemed like it was too early. He jumped out. Rob got into Warpaint at 120. He jumped out, by the way, just joining, just catching up. Last time on Billions. They always do that catch up, don't they? And he said it seemed like it was too early. Nobody else seemed to be interested in Warpaint. That's the thing, see, Rob. When no one else is interested, right? And you are discovering something you think is very good. If it had growth, as a small company, growth is the growth metric feeds into every other thing. Every other metric is relying on growth. You haven't got that, everything else depletes. It was too early. I did make money on it, but nothing like I could have done. But Rob, you've got something there. You're spotting things. Sometimes have a little bit more faith in your research. Yes, if own brand cereals, that's the same quality, but booze isn't an easy process to get right. And entrenched into people's minds, Warren Buffett proves brands matter. Yes, but he's had his day. No, brands do matter, Phil. I agree with you. Have you bought Diageo, Phil? Have you bought them? Have you? Why is Poolbeg not on your eyes list? Up 21% a day, over 50% in 3 days. Let's have a look. No, I did see Poolbeg. I saw it earlier there. I'm sure I did. Let's quickly look at this. Argentex, that's Paul. He's bullish. Full year revenue and profit to remain unchanged. So, read Paul's article there. He thinks there's value there. What's this? Strategic Minerals completes deep digital Cornwall project, increasing confidence in Redmore license. The Poolbeg's there. There we are. I don't think there's any news on Charrot. Any news on that? No. Interesting chart if you look at Poolbeg. Literally, you often get that. It's almost like when you see companies challenging at the support level, you often see a lot of this. I'll show you another chart that's happening as well. It's almost like the sellers dry up, and then a couple of buyers come in, or it's market makers messing around. You can see here, that series of low highs, and then really, this support level failed momentarily, but saying that there was a support level over here. And then almost maybe sellers have dried up. It doesn't take. What's the volume on this today? Let's look at the volume. What? Who's buying in there then? So 1.2 is the average daily volume. 5.2 million is there's some buying in there. Look at that. Is it the new guys coming in? Maybe. I know yesterday announced the former Amrit Pharma leadership team joined Poolbeg. Maybe they're buying in. I know Kyle's a big chunk of stock, didn't he? But yeah, good rise there. Look at that today. That's nice. But you often get that. You often get companies coming towards the lower end of support before it breaks up. And I think it is just a volume thing where you drying up the volume and a nice bit of buy volume really sends it up. And in fact, one of the best performers of the last few years has been U Group. And I had Bobby on the podcast. He was getting so frustrated. And I mentioned this before to my investment club. He was getting so frustrated that the growth was happening, the share price was ticking down. And I said, this area here, right, it was ticking down. Look at that. Broke 2 in a day. Wait. The previous high then to beat that high. Up it went from £2.30 and it went up to 13 quid. See? So, sometimes we see support breaking, unless it really breaks it and hammers down. If it drifts because there's lack of interest, and in fact that could have happened with Warpaint, it probably drifted with lack of interest. But you get a sellers drying up, and that can be quite bullish because all it needs is a few little buyers coming in. It pushes it back up. Like was it around here you were buying in, Rob, at 120? That so there. Look at that. The darkest hours before dawn. Sometimes that's not to say you should be buying when they're hitting new lows, but it does. Like I said, right here on Warpaint, you can see 110. A couple of times it bounced off that, a little bit dip below, bounced off it. 200-day moving average, new high. There we go. That's what we're looking for. New high. That's there we are. That's there. Yeah, Poolbeg. Good to see the rise of there. What else is there? Jericho, Poolbeg. What's the fallers here? Yeah, we've seen that. Diageo, look at that. It's a 62 billion pound company, and it's one of the biggest fallers today. So they've wiped off 6 billion of literally of value today, more than that. 8-10 billion. I mean, they've wiped up a lot of. That's a lot of drinks to sell. But it's a good company. I think things like that you put on your watch list. Definitely. Anything else? Did anyone suggest? I'm looking for, when I'm saying good businesses, I mean businesses that are turning over stuff, that are generating revenue. Any of you out there, think of one where it's growing top line very nicely. They're profitable. Literally, that's what you're looking for. It's decent value as well. That's what you need. You don't want it to be, overvalued straight away. But let me know. I don't own yet. I'm putting £100 in this month. 10th of the month. Will drip money in each month with H&L monthly savings, so I don't pay the transaction fee. I get the average over time. Fair enough. Wouldn't you want to wait for a little bit of a starting uptrend though, or the end of a downtrend, Phil? So that's all you have to look for. Has the downtrend ended? You don't have to sort of try and figure out if it's an uptrend. Time looked great chart that you looked at yesterday in your show. Yeah, Time is a good little business. That yeah. Also heard of someone who sold Celsius, a US energy drink stock, when it was 3 bagged and then it mooned. Yeah, that's it. Again, if you take any lesson from this, you will get a volatility. It's hard to, if you do put a stop loss, and you've got to make sure it's within that, you're not putting it too close to where you the level is, because yeah, Celsius, I had those on a watch list because it just taken off. And as one of the best performers ever, Monster Drinks, it's 100 bagged. And so you look at it in that sector. Okay, you can obviously get a huge amount of uplift in companies like that. You do energy drinks and all that kind of stuff, But sectors like that, Fever Tree and all that. But yeah, it's one of the things. If you get 100 bagger, and you could, if it's in the right sector, and you could, what you don't want to do is limit the upside. You don't want to do that, because literally it can make you rich. If you put a half decent chunk in, I don't talk about overexposing, but even 10% portfolio value, you can make you rich. Do really well if you get 100 bagger. Literally, that's your retirement there, within a nice house, several holidays a year. So don't limit that upside. That's the whole thing about shares, stocks and shares investing. You can, transform your wealth, and so you're basically limiting that opportunity. And I've learned that several times, missing out on several. Like I said, companies just through lack of patience, but jumping out. It's been a hard lesson for me. I'm not just preaching that. I've done it many times. I'm just saying it's been a hard lesson for me. And if you don't learn from your mistakes, you're insane. Doing the same thing and getting the same results. That's the definition of insanity, isn't it? Games Workshop, yeah. I've waited for 2 years, Diageo, with the reassurance of strong trade history and brands, but debt is higher than like, yeah. Yeah, but you've got to be prepared to change your mind, Phil, sometimes, when the story changes. I'm not saying it could get back to, what are you hoping? Let's look at Diageo. I mean, just looking at the chart, this is not looking at fundamentals, all right? What upside do you hope to get? There's risk and reward. That's all it's about, all right? What do you hope to get from this? Because we're now at 30 quid. I know, 27 quid, all right? So even if it goes back to, the highs, that's 50%. That's not going to make you rich unless you leverage the hilt. It's not going to make you rich. That's why you've got to look at that. The microcaps can do that in a day. So, and that's taking like several years to get done there. What, 679 days. So you've got to look at the potential upside. What's the reward? What's the risk? And that's so yeah, that's why largely it's okay to have that in amongst a few other stocks, but I won't be going big on big stocks. I've got a dividend fund for that. It's fine. I get a nice little income from that. But so that's why I go for and in the same time, Warpaint's done 200-300%. So I don't know how much you're looking to get from that. I mean, if it drops like to what, like say 20 quid, maybe you could double over a couple of years. Is it safer? I don't know. So that's why I'm going for big stocks. The reward, I'm looking to make money. on on stocks, not 10, not just beat the average and beat the market or 10% a year nicely. I want to make more than that. I just chuck in a fund. You literally you can get microcap funds, Octopus microcap fund that'll return you 20%, close to, not in this last 2 years, but it's done that. So I want to get more than that. That's how we're looking at. Okay, all right. To be honest, I don't expect this trading statement. To be honest, I didn't expect this trading statement, so that's a nicer place to start from. Okay, exactly. Just almost sometimes patience in these markets and bear markets. You get nice surprises because you don't hold stocks that you've liked and they've gone down even further. Okay, Revolution Beauty, last one, are releasing interims on Tuesday. Hopefully, issues are resolved and the business can move forward. Share price in doldrums and forecasting high single-digit million profits there. The AJC2, just what when you look at something like I said, what I've done there with Warpaint, like I said, and these are what I've punched in on the forecast. You've got to look, that's the potential. That's what I put in the that's potential there, okay, and that's at the growth 3% in 3 years because it's rallied very strongly. So now evaluate, unless they blow it out of the water, top line, they keep going 30-40% top line growth, then that can change, of course. And in fact, what I'll do on that, if I do that, if I put like 30% there, then of course the margins fall through better, and so you are looking at 55% upside. But you've got to know what. So what are you looking at? What are you basing the return on? What are your forecasts there? Okay. Just quickly look at the UK GDP today because it's boring stuff, but I mean, it's worth looking at. UK economy flatlines as high interest rates bite. The UK economy has failed to grow between July and September. Figures show after a succession of interest rate rises. So it's working. This is bad news, good news. I keep saying this. If this keeps happening, and we will flatline, I can't see it getting any better because interest rates are not going down for a while. So the businesses suffering now will continue to suffer. That includes Diageo. They are a market brand. People will still afford that, of course, but you've got to see some people will obviously trade down, won't they? For the next 6 months to other brands, alternatives are cheaper. The performance was slightly better than expected, as many analysts expected to shrink. So year on year to September, 1.3, forecast 1. Quarter on quarter, though, look at that. So last quarter was 0.2. It's gone down to 0. It was forecast to contract, but it's still now at 0. Month on month, so previous was 0.1, 0.2. Oh, it's double, so 0.2. But look at this. Now, if you're looking at what's being produced, why do we produce stuff? Because there's demand for it. Manufacturing production year on year to September, forecast 3.1, actual 0. What a miss. What a dreadful miss out of previous 3, So literally, factories are slowing down. Whatever's being produced has been slowed down. That, again, it's not good for people to work in the factories. Maybe some layoffs happening. But again, that suggests to me that inflation, is not going to stay up high because there's no demand. And they're not supplying it. You only stop demand. You stop producing stuff if there's no demand for it, unless there's supply chain issues, which there's not that much now. But so that says to me, inflation is going to come down. People are tightening their belts, and after Christmas, like I said, these figures are not going to get any better in the new year, are they? You may see seasonality demand, which is already baked in anyway, because people are producing after summer for Christmas. But I can't see that picking up in the new year. So that means it's good for prices, inflation coming down. That's just my take on it. Okay, thank you very much for watching, everyone. Have a nice weekend. It's a Friday. We made it to the end of the week. Some companies didn't. And the actual experience of one company went delisted this week. There may be others. It'll continue to happen. That's why I go look for strong companies, strong balance sheets, growing. Look for good businesses, not trading opportunities. Okay. Yeah, Phil, I know small pharma turning profitable is probably the best place to look. I have enough small stocks. We all know volatile. Balance of different companies will help risk. Yeah. Just get a fund. You can get like 10% for that on a fund, and then literally be very picky about the companies you invest in. It's on the small micro cap space, because you can choose to be picky because the markets are not getting any easier. You wait for trading updates to come out first. And let's see if they go down or up. If they go up, it's going to improve probably. If it's go down, it's not going to improve going forward. So I can't see now Diageo come up with any more bullish updates the next 6 months. Can you? Okay. Thank you very much, everyone. Hit the like if you could and share it. Everyone, mother, father, brother, sister, dogs, cats, your grandparents, share it as much as you can, and subscribe to the channel if you haven't. I think we're 19 away from a round figure. So if you get us that over the weekend, it'd be lovely. And don't forget, download the app, Box Markers app. It's free, but it's absolutely priceless, I tell you. Have a nice weekend. Enjoy yourselves. Bye 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 bye.